Tamar, thank you very much for being here. I want to ask you first about this deal. The U.S. said today that it will work with allies to provide more than 15 billion cubic meters more LNG to Europe this year. Is this going to be enough to curb reliance on Russian energy? And where do you think the gas is actually going to come from?
Hi, Leslie. Thanks for having me. I think this is an important step in the short term. Whether or not these targets are immediately achievable by the end of the year is up for debate. But I think the deal is really significant because it sends an important message to investors and industry companies that there is a long-term future for natural gas as part of the energy mix. We in the industry have always known that that was a sensible outcome, but the European Union had really been equivocating on the role of natural gas, really sort of wanting to phase it out in favor of renewables. So now we're seeing that there is actually a supportive regulatory regime for companies to make these long-term investments, not just in the productive capacity, but also perhaps more importantly in the associated infrastructure for terminals, for importing and exports, transporting, storage, et cetera. So I think that this is a really big opportunity for U.S. companies. And I think to answer your question, a lot of that will come from the United States, but it will take beyond this year to really ramp up exports because we're already basically at.
Beyond this year, how long are we talking in terms of a timeline for this becoming a reality, do you think?
Well, I think that the United States has the potential to actually fully displace Russian exports of natural gas to Europe by the end of the decade. So it will take a while, but the productive capacity in the U.S., particularly for natural gas, is enormous. And the main impediment really has been the development of the infrastructure, so the pipelines to transport it from the productive fields as well as the export terminals. So once we see that those are ramped up and we see that the FERC, the Federal Energy Regulatory Commission, has recently rolled back some of the environmental hurdles that have impeded the development of pipelines. So that's an important development that recently took place. And I think that that will help speed up this infrastructure, but it will, to your point, take a couple of years to fully displace Russian natural gas.
Tamara, when it comes to crude oil and the supply disruptions and how the market is attempting to price all that in, I see that your top line conclusion was almost any outcome in the Ukraine-Russia situation, aside from regime change in Russia, is bullish for energy prices. Now, when you say that, do you mean bullish, meaning the prices go up from here, or they'll be supportive of where we are and we're still going to struggle with replacing those barrels for the long term?
I think prices have to go up from here, and we're talking about structurally higher prices because even if China and India absorb some of the displaced Russian barrels, which we think that they will, but it will not be offset enough to fully offset those barrels. So we think that we are looking at higher prices over the longer term. Even if there is an immediate ceasefire, we don't think that Western energy companies, particularly the oil services companies, will be happy to go back and make long-term investments in Russia. Russia has very old fields. They are heavily reliant upon Western technology for the upkeep and maintenance of those fields, which will otherwise go into decline. So on a long-term basis, we do see that Russia could look a little bit like Venezuela and Iran in terms of having geologically tremendous productive capacity, but really seeing it marginal in terms of market relevance.